Speaking at the beginning of symposium at the Treasury Department, Geithner said Republicans and Democrats know what is at stake in risking a default if the debt limit is not raised, so failure is not an option. Today is Tuesday, the 12th of July, 2011, and this is what was reported today from Timothy Geithner. And I think many times when you look at different articles and stories within the mainstream media, you'll hear stuff like, well, the Dow Jones is down a couple hundred points today because of Eurozone debt issues, Greece debt issues, Spain, and so on. And then maybe a couple days later, you'll hear about how the Greek situation looks promising and they're getting a bailout, markets back higher again. And well, obviously, by raising the debt limit and by creating money, then that's not going to solve the debt issue. And I really even think they believe that or know that themselves. They being, of course, Timothy Geithner and the people they're associated with. However, if you look at this whole debt situation, you'll hear politicians say we need to get it under control, cut deficit spending. Of course, they never will. It's always been nothing more than talk. Yet I look at this monetary economic system in my personal opinion, and opinion is based on facts, logic, and mathematics, to be that of a cancer, an economic cancer, one that causes major hardship for many people, many businesses. And well, that's been the case. And if you know how money is created, you would know that debt is 100% guaranteed. And by raising the debt limit, then the cancer remains. At least in my opinion, the cancer would remain. And if you have a choice to remove the cancer, well, if you can do so, please remove it. However, I think if you ask the cancer about that, they'll say, you know what, failure for us is not an option. The cancer is not going to die without a fight. The silver market right now is showing signs of maybe making this inverted head and shoulders pattern. It's came back down to this previous support level. Whether it will make it or not, we'll have to wait and see, of course, because it won't be a pattern until it at least can get back to the top part of this neckline. But since we already know the neckline is somewhere around there, we can draw the matching level and give us a price objective up towards new highs, really in the $40 level, towards this head and shoulders pattern. There's going to be, in my opinion, a failed move regardless of the matter. Whether a fast move will appear after that is going to be tough to determine. And if we draw this descending triangle line in play, what happened was this market went below this significant support line, found resistance at it. This could have been very dangerous, but it didn't break below. And not only did it not break below, but it got above this line and above this line. Therefore, the failed move is going to be one of two moves, either this move in here or this move in here. Oftentimes, where failed moves can create fast moves in the opposite direction. So if this failed move creates a fast move, you'd be looking back probably towards the high area or where the inverted head and shoulders pattern would be that of. This move in here, if this is a failed move, the opposite direction is lower, and you'd at least have to think a break below this level, but even down towards 30 to 31. And it's very common when you're in a neutral market like this to go above and below key areas, and that's when you oftentimes don't get as many fast moves. Rather, when you're in this long range, when it finally breaks out, either upside or downside, that's when the big move is going to occur. We've already been in this range long enough where a big move is bound to happen, because the longer you're in the range, the bigger the breakout or breakdown usually tends to be. And I think we've been in there long enough for that to be the case. Alright, I'm going to end this video at this. Not much else going on. And have yourself a magnificent day, everyone. Bye-bye.